Right, hello, hello, hello. Today, here, there we go. Sorry, Kip is trying to sleep on me right now, so yeah, we'll see. He's all like crunched up, but he's not like the little baby that he used to be, so he doesn't fit as easy as he did. Anyway, all right, so we got our news coming in this morning. Um, we had kind of mixed news for the pound. Again, you can see here we had the adjustment; it was actually up zero point 0.4, so better than expected. So seeing this kind of come in a little bit less, again, it was really kind of a wash. It didn't really make a difference. A lot of people will see this and said, "Oh, look, they're halting," but they were higher than expected. The forecast is the same, so it came in. You're seeing, the pound. They're taking it kind of weak, but I would say overall, is it really weak? Not really. It was higher than expected. So, but the way that people are taking it right now with the 17 point or 17 pip move, they're taking it. It's a little bit weaker, but for the most part, if you look over here versus the dollar, they're more or less the same. Pound yen down a little bit by 28, not too much. Now, the big mover is obviously the dollar. All the data was actually red. Now, I think this is very interesting in the fact that this is the first time we've seen a core number actually go negative. But it's kind of the same thing. Last time was zero, but that was actually higher at point 0.2. So it was expected to be point 0.2. So it's basically, you know, kind of sitting exactly where it should be. But people will see that as a red. Now, the PPI number itself was expected to be zero, and that actually came in as a negative number. Now, this is the change in the price of finished goods and services sold by producers. It's not necessarily what we pay, but it's what they're sending it out as. So we'll see if that's at, if we see prices overall come down. I think the core number is great. The PPI number, kind of a reddish, piece there. And then also seeing the unemployment claim tick up. Now you're seeing dollar weakness across the board. Again, seeing three reds, regardless of what the number is, regardless of what the news release is. People are naturally going to look at that and be like, oh, that's bad for the dollar. Okay. Now, we did get some comments at a Macklin, BOC, and he says rates may be raised if we get stuck on the path. Now, this is what a lot of people are talking about, this getting stuck things. And again, everybody's shooting for 2%. Um, yeah, there may be a little bit of spillover from financial stress in Canada. It's been quite muted. We need to be diligent about risk management with banks, prepared to provide liquidity. So, yeah, saying all the right stuff, but this is what everybody's talking about. If we get stuck, we may have to raise again. And I think this is a very, very valid point. The United States is kind of the same thing, right? Kind of the same speaking. We don't want to end too early and have to redo it again because that just extends it. As far as yesterday's kind of fireworks, obviously the PPI is taking it over. Um, yeah, look, here's kind of what we talked about too. The de-dollarization trend is a reflection that U.S. growth is no longer the only story that matters. Yeah, I think it's 100% true there. But as far as yesterday goes, we didn't get tons. I wouldn't say anything in there was just, you know, oh, deadline. I was like, wait, what? You're giving us 1 point what? Uh, yeah, we didn't really get a whole lot. Wasn't anything that was too terribly surprising in the minutes. And again, look at Australia. All right, I think this we talked about this being a great release last night to be able to trade. It's up 58 right now, but again, over twice as many, and they actually did not increase. And remember, Aussies already actually halted their interest rate rises, so could be a nice little story shaping up there. They may have to start raising it again. But biggest mover on the board, it's going to be a strange day when it's the dollar Swiss, right? 101 dollar Swiss. You're like, what? Dollar Swiss, right? So yeah, it is what it is. Tomorrow, okay. Tomorrow we do have some big numbers. Whoops, that's today. There we go. Retail sales. Okay. Thing about retail sales is it was negative last time, expected to be negative again. Remember, so where retail sales comes in and why retail sales is such an important number. One, earnings, right? Are we going to recession? Remember, one of the reasons why we're in the scenario we are right now is because the US spender didn't slow down, right? They were still spending, 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 and that's why earnings lasted for so long. So tomorrow, this is a big read. Both being down -4. I mean, you can see the overall retail sales numbers, they fluctuate back and forth. You can see down -1, then up big, and then down a little bit, and then it fluctuates and hip hops back and forth. We're getting 2 months in a row of decreasing retail sales. Companies will look at this and be like, "Wow, the consumer is not spending anymore. Maybe we need to start adjusting things and doing some cutbacks." And even the core number, you can see the core number, it also fluctuates quite a lot. 1-3 to down big to big up and then completely flat and now just slightly down. So, but I think overall, if we get two red, not red, but negative numbers tomorrow that are zero point 0.4 or greater, um, I think that could send some ripples that, hey, listen, yeah, we're going in recession. The more of these kind of small things that are showing reductions, again, kind of more the thinking that, hey, listen, we could potentially be going into recession or we're definitely going to recession. So, yeah. Um, all big things. Waller speaking, also kind of a big deal. And then obviously the consumer sentiment. The inflation expectations, they don't put a forecast up, but I do think this is kind of important. There's expected at 3. Now people only think 3.6. That's what the expectation is. We know it's actually higher than that. But I'm curious to see if we have any bit of a drop here with if the sentiment starts going below 62. I know we're seeing, I think the general overall trend is, and I had this conversation with one of the team parents yesterday, talking about how, she had a job. What they're doing is they're laying people off, changing the name, and then putting a new salary out that's 15% lower than the job that they previously had. But the job description is exactly the same as the other one. So I was like, wait a second. So they're firing people, putting a new posting with a different title but the same exact job description, but 15% lower salary. She's like, yep. I was like, wow. I was like, I didn't realize it was that bad. So I'm curious to see now that more and more people know somebody else that's laid off. She said the job market's also very hard right now, um, because every company is lowballing employees right now. With that sentiment, and she said the other thing too is, with everybody doing remote work now, instead of just competing against people in the DC area, she's competing against people in the entire United States. So like every opening that meets her qualification, like what she's looking for, there's 400 people instead of 4 people. So she said it's a very much different interview process. So curious to see if this sentiment does start to get a little bit more bearish and leads us into a red day tomorrow. So with today's movement, again, dollar weakness, I think, is the only way to really look at this. Again, people will see all this red and be like, oh, that's super bad. Um, but we know coming from everywhere, from the Fed, from the White House, the job's still not done. 5.2 is, or 5.5 is still double what it's supposed to be. So those are all big things. So looking at where the VIX is. So yesterday we talked about, this absolute craziness. We'd pop back up. And crazy enough, we're still kind of sitting in that same kind of sideways channel. Now, the peaks yesterday after the initial push, not as bad, right? Not as crazy. But we are still on the bottom side of it. So we really haven't left this area. 18.62 is kind of low if you look to see kind of where we've been recently. We were as high up here as 30. So is it low? Yes. Has it had an issue kind of going below this area? Yes. Looking at the indices in regards to the VIX being a fear index, they're not doing ton. Up 0.28, up zero point 0.8, down minus zero point 0. Will probably turn red or green in a second. Up a 0.5%. The dollar, obviously noticeably down. Why? Because it was 3 different red bits of data. I'm not surprised that this came down. It was here, and then it went lower. Funny enough, look at this little Harry Potter move. We talked about 101.50 yesterday holding, and look, 1, 2, 3, 4 starting to base. Now, unfortunately, this one missed by just a little bit right there. Again, look, 1, 2, 3, base in 4. You're expecting a pullback. It did. And what did it do? Dollar strength, dollar strength, dollar strength, dollar strength, dollar strength. News. Did it go right there. So we talk about the market kind of knowing. I mean, how about this? From that 5:30 reversal time frame, dollar strength, dollar strength, dollar strength, dollar strength, dollar strength, news, straight to the downside. And it literally almost pulled the Harry Potter in there, even though we don't typically, you're not running a Harry Potter on the Dixie, but funny how that kind of works out, right? A break, a pullback, and a continuation. So much fun. Um, as I said, indices are up a little bit. Commodities, okay. Commodities are a little bit different of a story. Natural gas down 3 today, 3%, down at 2.02. We talked about that was way too high yesterday. I'm trying to be careful that I don't spill coffee on the boy. I feel like that would be bad. Down at 2.02, we talked about how 2 is the magic number where it really belongs. So you can see had some major movement in that one yesterday. Oil itself, 82.88. So we're still close to that 83 mark. We're down a little bit today. Again, we're going to start seeing this one move. And again, the reason why is if these numbers are all red and this is signifying recession, that means demand should be lowering. So we should, again, if nothing if nothing goes crazy in the Pacific, these two should continue to drop lower. This 83 number, it should turn a roll. Now, gold and silver both up nice right now, as you expect. Talked about this level yesterday. We tagged it all the way, pushed back down again. We came back up. We grabbed it again. We started the base right before it. You're like, oh yeah, look at this. We pulled back to load it up right before the trade, and the news came out. Boom, took off, and it actually did hit. It actually based and came back down. So this is what the actual trade would have looked like. Here, I'll put on 15 a little easier. Right, pulls back up. There's your news. Boom, boom. Right. It'll most likely tear back down today. Again, the profit taking will come in. Should it be up here? Yeah, I think so. I mean, seeing those numbers at this point, I don't think it changes the Fed's trajectory, but I do think recession is probably on the way. Um, Not surprised by either of these two, and they're both up about the same 1.1, 1.5, 1.6. They're supposed, silver's supposed to be double what gold is, so not necessarily surprised. But up $30 is a nice little jump, and look at that. I mean, a very stereotypical, you know, one hit, two hits, three hits, and a base right below. Technically a fourth hit, and then boom, it took off and that zone should have broken at that point. So, yeah, pretty easy trade in that one. Silver looks very, very similar, right? Has pushed in, pushed in, pushed in. There's three hits right there, not even including the original push, and did the same thing. 630 down, 830 started to pull away, pulled back, grabbed the zone, took off. And that one's got a little bit more room to run. So let's start with Aussie dollar. So Aussie dollar, again, we had the touch yesterday. We can take that off. Profit target has now been tagged. Um, and from where that was, look, 1, 2, 3. You could say that's a 4. If not, your 4 is here. It's starting the base. You expect it to break. It's going higher. We didn't have another level drawn until all the way up here. We had a 78.6 that we mentioned yesterday, but there's nothing really over there signifying that this is going to be a good area to sell from. A little bit of a peak there. Hold on. There's a grain of sand on the mouse pad. So this one's got some more room to run, right? You can see early morning, right? We've basically done nothing but go straight up, right? The 3 o'clock candle is right there, and it's push, push, push. We're about 70 pips up. I was looking at this earlier, and I was like, are we overextended? This is the daily ATR of 74. We're at 70 right now. Will there be some potential U.S. strength coming back in now that we're in the U.S. session? Sure. There'll be profit taking come in. So we do expect a little bit of a roll. It's kind of the same scenario, though. There's nothing really here until we get up higher. Could it artificially turn because some people are playing the 78? Sure. Is it a great entry? No. So kind of a little bit harder to be able to take advantage of. Things are not working. Um, Yeah. So we got some room to run. Could there be an artificial turn here? Sure, there is. But until we get a little bit higher, I don't really see much that I'm really excited about on this one. I would like for it to go up, maybe for tomorrow. Again, there's no news right there for Aussie tonight, but I do like that as a turning point where profit taking will come in. Give it some more room to run. I'm going to leave the 61.8 on here just because it did spend so much time. Right now, for any type of reversal, you should have some profit taking coming in right there. So we'll use that. We can drag that up right now, and you can see that's also the 23. So again, look for profit, but we could also potentially get a bounce off of that right now, depending on if we do have the reversal coming in. All right, but right now, it's all right, buds. You're okay. There, you're good. 67.85. Um, there's your reversal, and again, this is purely yen based. Yesterday we were talking about a little level in the middle right here, and you can see touch 1, 2, 3. We expect 4 to break. There's the break in 4. As you can see, if you just box off where the tops of these are, he did have a bit of a Harry Potter trade higher. So we're pulled back to that level right now. I'm actually kind of looking at this one right now and saying, listen, this is an old level. right? Can we kind of double up the Harry Potter, right? Here is your three touches. There's your break, your base above, your pullback, your takeoff. Here's a confirmation test of it. You're hitting again. Could we have the same scenario in the other direction? And it's about an 8.5 pip risk on this one, so not very big. But could you throw a short position in here? Sure. Right. 1 to 3 is only right there. It is a little tiny bit deep. Typically, we're looking to take profit right there, right? So a little bit deep. That one is not on. That's close. All right. Here I'll put some numbers on this one, and I'm okay with this one. I think this one makes a lot of sense of where it is. Just watch this 8506. Looks like or 80 89, 8902. Yeah, 8902 is the bottom. Um, right there. And again, easy. 1, 2, 3. Looking for a break. It broke without even slowing down. Based, pulled back, entry. And actually, there's another. You could have taken it just off of this one, but early morning. Again, here's your European Open right here, 3 o'clock. Okay. Euro dollar. All right. So this one got all the way down. Early morning today, this one kind of rolled back. So this one had made it to a 1 to 2, 2.15 actually. So most likely in this one, you guys would have either banked maybe a 1 to 1 or you got stopped out till break even. Looking at where it actually turned, and I think we mentioned this yesterday. We were sitting Wednesday. We're sitting right here. This came in at 11:45. Right here is the last push. And here, I'll bring it across. I'm gonna bring it down here just so you guys know that I'm not cheating on this one. Copy, paste. You see where that one turned? It turned exactly where you would expect it to turn. So that was one of the considerations you had to take on this one. Once we got the entry, whether it be here or here, knowing that there were buyers there and seeing this one, you should have been trailing this one. So most likely, you should have trailed this one and probably gotten stopped out right about there and dealt with a 1 to 1 on this one. You can see right there. There's your 1 to 1 ratio on it. And again, locked in 1 to 1. It's not like we were looking for 1 to 1s. Those are not great trade setups to do. But when you're up 2 to 1 and you only have one more to go, you're not going to risk two to make one. That's a fool's bet. Locking it in, worst case scenario, you make 1 to 1. It is what it is. You would have expected a turn here. Um, it was a decent level, but you would have expected a turn. You just trail that one down. There's no reason to leave that free two on the table. And again, if you wanted to close it down at two, knowing that, great, close it down, right? But most likely you ended up coming out of this one. Again, you would not have taken a loss on this one. That would have been totally on you. Now, it eventually did break, and again, there's one, there's two, there's three. Actually, I could use this one, but there's one, there's two, there's three, basing right before you're expecting it to break. It did break. Maybe you got in the Harry Potter here. If not, if it was not enough distance, which to me that wasn't. This one easy. Rally through, broken zone, base, pullback, target to the top side. Okay. This was also an easy one in the overnight. Actually, I guess this one was really 8 o'clock this morning. This is more or less a news trade. And there's three right there. Let me go back down to the 30. That's what that one looked like. On the 30, it's pretty easy. There's not that. This hiccup here, no. Rally, base, pullback, boom, right there in time for news. Right. So yeah, it's over right now. There's nothing we can do with it. It's already out. I would expect this one to start rolling and turning back down. So let's adjust some of this one, bring it all the way up, and you can see that same level magically happens to be the 23.6 as well, and also in the close proximity of 10. So let's bring this up. Do I need that? So yeah, that's what we got going on. Is there a turn up here? Yeah, we are at a 61.8 in this big down draw. We are right here right now. So is there a potential reversal? I'm on the 4 hour right now, just so you guys know. Yeah, there is. These are two areas that I would mark off. See, this one is right there. That's what we're looking for right now. So, are we in a potential reversal area? Sure, we are. But I think right now, wait for confirmation and come back in. I think the overall sentiment right now is the euro is going to be stronger than the dollar. We will see profit taking, but wait till you get a confirmation there. Wait till you see that the green, red, green. I think makes the most sense for that one. So yeah, we're in a bearish area. Not willing to take this trade. I'm not putting a 35 pip stop loss on something. Not in this current environment. Okay, but again, if you were able to catch the air part of this morning, great. So a lot of play in this one. Euro pound. So Euro pound jumping. We talked about this yesterday, being like bam, 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 and it did. It ended up basing and going through. It ended up going just a little bit lower, right? It cycled through at the European market, and again, there was buyers there, and it cycled through and came back up again, and then ended up coming back out the top side. So, we knew we were on the top side. There's a little bit of a level sitting right where we're at right now. It is the 78.6 as well, which we don't love. The zone is kind of confirmed, but it's a wick against a wall, kind of one front run and one. So, is it the strongest? Not really. And you're seeing it's not really having much problem going through. I think this one taking it to the extreme level makes the most sense. There's a lot of chop in here, a lot of wicks. There's a small reversal here, but not really interested in much right now. If you look at from basically the European Open, the peak this morning, we're talking about 41 pips. So this it looks like it's like this. It's only 40 pips. So it's already moved this entire day. It's got a daily ATR of 45, so I would expect it to start kind of running into some profit taking. But the reality is, what type of risk are you going to set on this one, right? 6 pips or something like that? I mean, come on. But right now, know that pound is weaker, which makes sense with the data this morning. And again, could you have played this morning? You could have. You could have played the pullback right here at 4:30. But for the most part, this is again more of an early morning, more of a U.S. session based play. Trying to see where probably this one, right? There's more to do in monetary policy. Core inflation is still very high, which is what everybody's saying, right? It's more optimistic with the euro. Like, yes, it's too early to comment on the rate decision. There is no threat of systematic crisis. Yep, more seen in individual banks. Yeah, so all these comments, 100% bullish, 100% bullish, and that's why we're seeing this pop. So we should see again. This is a news-based move. We should see a turn, flip, rollover. As I said, there's one level here, but not my favorite level in the world, and look for a turn and flip and roll to the downside. Euro yen. All right, so euro yen. Okay. Euro yen. So yesterday about 1 o'clock, we were looking for kind of a turn and flip off this one, and I said this is not really the one that we want to play a proxy in. Obviously, some of the other positions are better, but you can see where it flipped at 2 o'clock. FOMC kind of came back down again, found the base, and just held, and came up again. The problem with this one taking this short, and again, this was drawn from yesterday. We were really looking to see. The reason we had it drawn here is because this was going to be an FOMC thing. Although again, I warned you, it wasn't going to be the best one, right? You can see it did. It went down. What? I can't even see it from here. It was at a 1 to 2, and then kind of tick back again. The problem with this is there's one touch, there's another touch, there's another touch, and pulled back. It's like, oh, really? Really? It ended up going to its full profit target. So had you taken this in an options based product, you were fine with it. But the reality is, the original set was right there. There's your original 1 to 3, right? And it was okay. I mean, this is right there is where we were looking for profit. It's just one hit, 2 hits, 3 hits. You're like, oh, it's gonna break, and it did. It just barely peeked its head off the top, but it didn't go above 147. So seeing it push down, we're gonna probably hit profit here in a little bit. Okay, so let's extend this back up, and you can see when I did that to its high, you can see where this 23 now is pushing back, and it's right where that profit target is, right in this level right here. Okay, we'll just leave that. Turning that one yellow on the top side, because now that it's officially broken, once we rally back up, we should be able to break through the top. And I'm wondering, do we? Yeah, it's 20 pips. Do we bounce, grab the 147, come back down, and then take off? Is what we're looking for. Okay. Pound dollar. All right. So pound dollar. So pound dollar didn't actually have the move they were looking for. You can see yesterday we're looking for some movement. We had driven above it right beforehand, and it kind of pushed back down again. So we talked about, hey, listen, this was a zone. You can see there's one, there's two, there's three. You're like, oh. And it did push through beforehand. We were saying, look for the news. And then it started the base. So you may have actually been able to play kind of like a Harry Potter pulling back into this zone. And then this is the European base data this morning, and it took off. So it kind of did what it was doing. We were actually looking for a spike, but it had already broken through 3 times in close succession. So we knew that this was not really going to be a short area. Once it broke, it's like, is that old zone now it? And again, that's why I don't like the 78.6. I don't think it's that strong of a level. We talked about coming all the way up to 125. It ended up hitting it and rolling back down again, and now we're kind of playing with it right now. Where this is, I do think that this is probably due for a short in here. Unfortunately, with it being pushing, I kind of want to see the confirmation of it. It's trying, but it's having a lot of fight, and it is starting to head back to the downside. I see this one kind of rolling back over into this level here at 122.88. We're not going to use this for news. I can take this off now. Let's see. We can take this off. We'll pull this up. We will do. Go find a low here. See the 23 right around that same level. So I think the level down here at 124, 24.9. I think we start looking for any type of buying in this area. Okay. It's got to move about 40 pips. So a single 4 hour ATR, right? 4 hour ATR is 32. We pull back. Again, Harry Potter level, kind of confirmed. 23.6, we should have enough buying coming in there. Ideally, I mean, again, this would be really slow. We look for it here. Right? This is my LDS scenario. Now, we're 20 hours ahead of time or 22 hours from this release. I think this, if we do tear back down again and we are sitting somewhere over here, I think this is a great place to take off from. Especially if this is going to be the top and it just kind of meanders around in here and slowly comes back down, right? 23.6 pullback on this push for news, dollar strength coming into it. Love that trade. I think that's a great trade. But we got 20 something hours to go, so a little bit much on that one. But I do see it rolling back down today. Pound yen. Can you say yen, 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 yen? We were talking about shorts up here again. 1, 2, 3, basing in there. We weren't really looking for the short there, but this is where the pound data came in. The pound data was really not really a big deal, and we warned yesterday as well. There's our 830 number. You can see that's where the spike came through. We were calling for shorts in this area, but again, short, base. You're like, yep, it's breaking, and it did. And then the yen took off because of this morning's news. So, ideally, you wanted to play a U.S. based pair, not a proxy. So, with it going where it is right now, you can see if I pull it back. I wouldn't say that it's in the. I wouldn't say there's any 23.6ers in there, but we do have a level of basing, really, kind of right here, and that's what it's going off of right now. Right. I mean, I could shrink this just a little bit to kind of that zone right there. Right. That's what we're based off of. Um, 135. This could actually be a reversal now. So it has a daily ATR of 173. This is 135. It's got a 4 hour ATR of 55. So inside of an hour and a half, it did 2.5 4 hour ATRs. That kind of runs into the potential for a reversal. It is also 10:04, so we're getting close to that 10:30 reversal time. I'm wondering, it's 28, 1 to 3, 2.9, 3. Actually, not a bad little move there. So we have the pullback. We don't yet. That's not bad distance. Again, not one candle, but you could say that's a parabolic move, right? 2.5 times the 4 hour ATR, and we're on the 30-minute chart in an hour and a half. Profit taking coming in 10:05, right? Reversal after the open, 87 pips. It's not the worst of trades. I'd still like to see the confirmation. I would like to see it come up and then touch it one more time. Not bad. Dollar CAD. Not surprised. So dollar CAD. There's your 8:30 candle. There's your 10 candle. It's like one, two, basing in three. Guess what's gonna happen? It's gonna break. And did it? Rode the top, went through, and broke. It unfortunately didn't give us a pullback. I mean, I guess you could have put this up here and said, hey, listen, there's your breakthrough and there's your pullback, but it wasn't a clean Harry Potter, and you could have taken this through. But the original level was here. So most likely you missed this one. This has every reason to be down right now. It makes sense with the comments we've heard. So not much to say about it. I think looking for this one tomorrow. I'd like to see what it does. Right. See where we are. Um, let's go just a little bit lower. Look at this level here. Touches that broke. We go like this. Oh, look at that. Magically, when I'm looking at this one, look up here. The 61, 78. By just pulling it down. So yeah, if we find a bottom right here, somewhere down here, we have a 23 set up. Move this. It's like, why is Melissa messaging me? She's like, I hope you have a great day. Nobody vomits. I'm like, yeah, me too. So yeah, I think if we can get a little reversal around here, look at these three as potential areas for shorts for dollar CAD, particularly for news tomorrow. Actually, this 134.04 doesn't even need to be news for me. Maybe if we can rally back up, it was a nice little drop base pullback to it, and then boom. Because it is in the most recent easy to draw high to low trend right now, people will be looking at that as far as shorts go in here at the 23.6. So that's not a bad one there, right? Not a bad one. Dollar Swiss. Let's see. All right. I was trying to draw this one on a larger time frame. Dollar Swiss, we got some movement. So looks like we had this area drawn here down low. We blew through the first one. Let's see what matches it here. This has that same type look, but it's not. It's right there. 50. Yeah, that punch through. We can pull this off. Through the top. Harry Potter off of it. Don't need that. Right there too. Right there. Hmm. It's an interesting one. Hmm. So obviously, downtrend. Seeing green right now, we're getting to a downtrend setup. wish this was cleaner, right? Look at this mirror bottom. This 5 hours, or no more than that, one entire day. Wish this was down here. Hmm. That's a hard one. There's obviously a zone sitting right there. Nice little pullback, right? Drop, slow. Again, we typically don't like this many candles. Nice punch down again. It's running into a level. What I don't like about this one is this level is so old. Again, we have hit it. This is the third touch. We have pushed it pretty deep, but it is from a higher time frame. 4 hours can last a little bit longer. We are kind of in an extreme range, right? We typically don't want to sell. The problem is we have buyers sitting here within a 1 to 3, so it's like, oh, I like the fact that it's all it's all zeros, right? It's whole number. I like the fact that we had the basing. I don't like that it's 6 candles, but the fact that we can't go 1 to 3 before we have confirmed sellers or confirmed buyers, uh, always makes it weird for me. Makes it weird for me. So it's a hard one. Yeah, as much of it. Again, we're a little bit overextended right now, right? This is a daily ATR of 77. Now we're back down. You can see it's rallying back up again. 60. Yeah, it's chopping. That's a hard one. There are probably shorts in here. I'm just a little bit leery because we don't have enough room to run on it. Dollar yen. Absolutely 100% agree with this one. Again, our Harry Potter alert still live. We re-enabled it yesterday. Now, again, profit taking down here. We talked about this yesterday, right? That's why we had this green. Would have been a target first in the short more than anything else. Look, it's basically the same. Look at this. Boom. I understand why it's turning there. We had drawn that from yesterday. To top of the box. Look at that. Look at that. 132 flat. Top of that level. Confirmed buyers. I think this one, it would have been, I think short was the way to take this. We talked about it yesterday, getting short from this one. Again, I think we still have the alert set up top, 133. Once we break through the 133.85, again, we go up to 135. Right now, I think what it's doing is exactly what it should be doing. It makes complete sense. So, yeah, there's no trade set up, unfortunately, on this one, though. If you got in down here, then yeah, you're up already 1 to 2. So, it's all right. Here we go. All right, let's run this up. You can see yesterday we talked about the long during the craziness of news. Right. Let's take that off. All right. So you could say that this is a parabolic move. We're slowly tearing back down. We're kind of in a sideways channel. I think this one is really at the whim of the market right now. We knew we had a high side up here at 83.50. We got really close, or 88, 83.48. At 130, we got to 83.53. Right. So we had talked about 83.48. It made it just a little bit above, and then turned and rolled. So it's kind of doing what we mentioned yesterday. I don't really necessarily like all this. Right. Does it tear back down again? Yeah, it depends if people are going to be stuck on the recession thing, that the economy is going to be stepping backwards. So, yeah, it's funny. Oil markets focus on demand ahead of summer driving season. Well, if you're getting laid off, you're not driving. So, yeah, I think this one. I think it's a slow deterioration today. I don't think it's anything crazy. The only thing that moves this one right now is a big headline. There's no way to prepare for that. 201. You can see yesterday. Again, we talked about where the target was. We talked about a pullback, and yeah, yeah, close, close. We were calling for a profit of 205 yesterday, and I guess it just hit a low of 2.005. So almost that $2 mark back in, right? But we got the break. Actually, at 10, yeah. So if we use this as our base, which was fine, you could use that as your base. You can see we did get a touch, so this would have just adjusted down, right? Yeah, we had that one here yesterday. If you do that base. So you may have gotten this one. Anyway, again, we went down and we're almost at 2. So that's what we're calling for. We were talking for a target of 204, and again, we're below that. So maybe you guys grab this one again. Natural gas is such a strange market to trade. Again, we knew we were sitting high. We knew we had sellers looking for the break, and it's in. But can we do anything with it now down 3? No. No. I think if anything, we want it to stabilize here and look for it to go lower. But again, there's inventory. We'll see. Gold kind of already did gold. You see, gold's having problems. It's running into the sellers now. We have our red. The green went higher. Confirmation is not in yet, right? So we'll see where this red is and what the next green looks like. But again, it looks like it's starting to potentially have an area where we could see selling. Did it get up to 205, 250? Nah, 2048 is where we are. So again, confirmation not in. Again, I think this one turns and rolls back down. We're talking about that short. That's funny. Right there, 8:30 yesterday. Boom, and then FOMC brought it up a little bit, not too much. Not too much. This one. Is there any? Look at that. In this last drive here, right? And again, the trend changed, but you can see the 50 just kind of love when that happens. Yeah. Yeah, I mean, I would doesn't change. I still think we're waiting for that confirmation to go in. We don't have it yet, right? The green went higher, so again, no confirmation yet. Look for that confirmation. Look for it to drop. And right now, if you go short, I think look for 2016.50, right? 2015.60 is a decent level there, right? That's a nice little target. Look for that one. There may be some pullback off of it. We'll see. But once that confirmation is in, then yeah, pull the trigger to 2016. Silver, again, we're looking for 2605. You can see it made a push. 945, it tried. But right now we have our red. The green went higher, so we don't have it yet. We have a new red painted. Waiting to see where the green candle is in this reversal. And once the green is not as high, we have that red. We have confirmation of a reversal. Look and take this one back down. This one would go to I don't even know the best profit target on this one. Probably down here, but we're gonna have a hiccup right here. I think what happens if you go short here, if you go short up, if the confirmation is used and we come up at that 2605 or 26 mark, um, I think you're gonna have trouble here. I think you're gonna have trouble here. These would be the two profit targets to the downside. Oops. But right now we don't have a confirmation. We got a new red painted. This is a great red painted, but we need a green candle. So come back every 15 minutes and check it if you want. Or you can do it on a 30. I mean, if you really want, you can just do it on a 30. Right? Not in yet. Check it at the 30-minute mark. All right. All indices are in the green now. So let's see. Yeah, it's pulling down as it should. Dollar pulling back a little bit. It's fine. Let's see what we we got for opening today. Now again, oops, cancel. 8:30 news like PPI, always a little bit strange for opening print. Um, so close. Maybe you did, depending on what. All right, so this one is going to come up to a draw. You may have said, I'm going to only take this one right here, and it's confirmed. If you did, it gave you the pullback 8:45, 9, 9:15, 9:30. Watch it, I'm busy. Can you give me 5 minutes? Okay, go find your play. It's okay. Find your play. Somebody's just waking up. There was a long entry on this one. Unfortunately, didn't pull back. Depending on how you would have drawn this zone, if you would have said it was there, if you would have taken it and said use the entire red candle, it would have been close. The entire basing area is really kind of in there, right? But that's a little bit deep. I would say that you probably drew it down here, and this was probably a no entry. It did pull back. It did have the room to run to the top side. I was okay with that, but unfortunately, no entry on that one. I think ES probably has some issues. It's been here before, but probably up in this area, right? There was a strong push off of that one. There could be some, profit taking from this initial push coming in, just a little bit higher than where we are. Um, we'll see if we get some headlines today. I think the markets are justified to be a little bit green today. I mean, the data is bad as far as PPI, but you know, could again, it doesn't really tell us much about the economy that it's not costing producers more to make things. That's a good thing, right? That doesn't really change the Fed too much. NQ, let's see, 9:15. Yeah, it gave us the pullback. Problem with not this one is the 13,000, right? What, you don't know the code? Um, Here, Jen's like Melissa, not a morning person. Yeah. So this is the problem. You did get the pullback for 13,000 at 9:15, but kind of the same thinking. This was from yesterday, so that wouldn't have even been. So it had room to run. Funny, we talked about this yesterday. The red, green, red. Look at that push down from yesterday. There's your red, green, red confirmation. This is what we're talking about in gold. So gold, right? We have a red, but the green went higher. Not in. Red, green did not go higher. Red close. Boom. Pull the trigger. So nice reversal yesterday, all the way back down to 13,000. Probably. Oh God, that's a crap candle. This one has some selling at 13,203. Okay. Right now, nothing really in the way. YM. All right, let's see the YM guy here. So this is where our confirmation came in at 8:30. Can we draw a base? We can. There's your 9:30 candle. And again, looking for the overnight confirmation, it was at 8:30. There's your level of basing. There's your confirmation. It pushed deep, but you can see it did not go out the backside. Right. Boom, 1 to 3 right there. So 100 points. Pretty easy. Where this one's going to stop, kind of the same thing. It's got some room to run. No confirmations on anything until up here. So Russell. So Russell. Oh, look at that. So Russell, if you're looking for a confirmed zone, now this is not the best confirmation, right? Because it pushed all the way to the end. Or you could say, well, that's where the zone was, and that's where it was. Um, not the best confirmation if you're using it for a zone tool, then it's along these lines. but it doesn't really necessarily matter either way. You see this? That little just pinch right below. Trade went well beyond, and it's right back up to 1800. But had you traded this with like a futures product, you probably got stopped. You maybe not. That may not have been the spread. You may have not gotten stopped on that one. But overall, again, we talk about taking these with option-based products. The Russell tends to be the more volatile. But if you run this down, 1 to 3 is only right there. So you can see it's well above. But that little tick right below may have gotten you. May have gotten you in the futures market. Options market, you're fine. It doesn't matter. If you got in here in the options market, it wouldn't have made any difference in the world. All right, now here's an interesting scenario. Let's check this out. Oh, look at that. The 50 is right at the 1800, and there's a level right there. Ooh. Technically is one right there, too. So, question is Russell going to start turning and flipping? It's got two little areas. I kind of like the 61.8 a little bit better, but I do like the 50% retracement here because it is the 1800. So, ooh, that was that is an interesting one. That is an interesting one. Hmm. Yeah, I think there's a potential reversal coming in Russell. I think this is probably the first one to go. It's the closest one, but they're all the same. A little bit of a push up, turn, and flip and roll to the downside. So, yeah, not horrible. Look at this. This is going in the wrong direction. Come on, oil. Come on, oil. You don't want 83. I'm looking for this reversal, but it's not there yet. We got to get through this. If we can pull this, if we can paint green, it'll be $1 back up to 101. So, all right, that's it for today. Let's get into the drawing. All right, who we got here? Ernest, I know, is here. Mm, yeah. Well, by the way, how long did your house stomach virus last? Jin decided last night she had to get one more in at 9:30. Kip's been okay for the last 24 hours. The little ones just keep trading back and forth. So I'm like, oh, where's Mr. E? Where is Mr. E? Come on, Mr. E. I'm giving him his chance, guys. Look, at three, I'm gonna shut this one down. Remember, this one only counts one on this page, so the contest has been open the whole time. I'm gonna give it to him. He's going back to these Twitch problems again. Right? Here we go. 5, 4, 3, 2, 1. All right, you missed out today. All right, winner of today's pip chip drawing is Mr. Wow. Oh, yo, Mr. Big Spender. Mr. Big Spender today. Look at that. I really got to stop mentioning names too. I know, Neuro, my fault. I asked Will a question. I said Will's name. Google heard Will. You know, the Echo Dot in the basement must have heard me say this, so my phone heard me say Will's name, and then bam, that's what happened. I don't know why it does it that way, but it does. So, yeah. Who won? Neuro, you won yesterday, right? Yeah. Yeah. I'm telling you, I got to stop saying names. There's no, I don't know why it does it. Your S Fed cut bets batter dollars. Yeah, yeah. So, all right. Again, that's it for today. Core retail sales is a very big one. It'll start affecting earnings. Could be overly negative, more than PPI or PPI. I mean, PPI is an important one to gauge what inflation looks like on a producer's level, right? The fact that it's not costing producers to make things is great. That doesn't mean they're going to sell it to us for cheaper, because if they can make more money off of it, they're going to do that to make up for some of the inflationary cuts they took last year. As well as if fuel costs are higher right now, it could still be the same exact price because of the fuel cost. But tomorrow for retail sales shows us whether or not that spender is still spending And remember, the spender was an important piece of why we are not in the recession or not having the problems that we did. And also the reason why inflation continued to grow, because we kept spending. So if we stop spending, that's a bad thing. All right. With that said, I'm out here. You guys have a good trading day today. I will catch you tomorrow morning, 9:30 Eastern Standard Time. And we'll see what we got. See how we end the week. Should be fun. All right. With that, I'm out of here. I'll catch you guys tomorrow. Thank you again. And I'll see you then.